What up, traders? What up, investors? Ken here from Dyslexic Investor, and thank you for tuning in for another fantastic video. Today, we're going to be talking about Intel. Intel had a big explosion on earnings again. Is AMD taking their lunch? Most likely. But that being said, we're going to be looking at the chart, looking at some unusual options activity, and kind of developing a story in a case of looking at some support resistance lines, in particular, what could happen and what should look out for and how to react to it. Again, without further ado, let's go ahead and jump into the charts. So, looking here actually at the option chain first, not the charts, we're going to be looking at 3,000 contracts. Again, we're talking about that February 19, 2021 call options for, again, that $50 strike price. Again, that's currently $2-ish where it was currently traded. They paid for about $2.47. That's, again, going for nearly $750,000. For that to kind of see how that is currently, we're going to be switching over to Tastyworks, which is, again, the trading platform that I use and love. Again, if you're interested on changing out of Robinhood or Webull, you should check out the affiliate link down below. So we're going to be jumping into February 19th, 2021, the $50 call. On the call side, again, you're seeing that large amount of open interest that has an increase there. And then you also see the strike prices basically somewhat flat. They're up just a hair, basically nearly a couple points there. So nothing too shabby, nothing too fantastic to go on there, but we can look at actually, I'm sorry, wanted to bring this back over. I wanted to show, let me delete this leg and view the options. You can see it really just represents on that option how cheap it got. So basically, before earnings, we're talking about that IV crush. Even these longer dated options will get hit if there is a enormous drop in the overall stock, which, guess what? Intel had a huge drop. It went down from basically was trading around $6 to $6.25 to around $6 flat just a couple days ago. Ever since then, it's dropped all the way down to around, again, that 620. Got down to the 220, but now it's kind of like that 250 to 260 range. Of course, that's literally got a haircut, really just being cut in half and then some. So this is definitely some very cheap options, depending on if the individual already had some. If they're hedging, again, especially with this large options activity, it's very, very difficult to understand on what the trader investment or whatever the individual is doing on that end. So that's that kind of the way. So let's go ahead and make our way to the charts here, as you know and love, that I always scream on my screen here with, again, Thinkorswim, using the charts within that. So we already had this pre-existing Fibonacci extension model up here from the swing high to swing low to swing high. So again, to kind of recap, that last quarter had a pretty significant drop. So from that day to that low of that day was about 19, let's just call it 20%. And what we're looking at the high today to the low, oh shoot, no, dang nabbit, no. The high to here is around 12-ish%. So it's not as large, again, only by 8%, but it's still a very large drop from what we're seeing here. The thing is also to be mindful of, like, people, like, I'm getting messages, pings, email, people telepathically telling me, hey, what's going on with Intel? What is going on with Intel is going to be probably going to be holding a particular line here, maybe around the 50, potentially even coming down to the $47 strike price. So that's kind of what's happened previously. So again, when a large move down, if a stock moves up or down or whatever, if it has a large deviation move, so larger than expected move, normally breaking the bands of some kind. So we can look at this chart here to kind of really show on what the overall velocity was. So again, these little red lines are basically the Bollinger Bands. The Bollinger Bands really keep a stock within a certain trend or within a bubble, lack of a better words. But the stock dropped so drastically, aka the earnings disappointment, that it just burst right through it. So more or less what happens is that bubbles are going to expand. Look, again, little bit here, we saw that huge bubble expand all the way out. It's going to have to really start shrinking all the way back down because it has to recover. Like Intel was hit. It basically had a broken arm and probably a lot more because it got hit by like a freight train. It's got to recover It's got to take a little bit of time to recover. You just can't take a magical pill and then bada bing, you're up and ready to go. That being said, the same thing with stocks, especially they have a large move like this. So more likely, what's going to happen is what we're going to see is a very maybe tight range I could be trading in. So again, we could see a bounce around in between that like that low that we previously saw from the last earnings, so around that $47 price target to around 50, and just kind of bounce around for a little bit. Again, start to recover, potentially start getting some more momentum to build up to potentially see the stock build up from there. That being said, I don't know how it will affect if two large quarter misses in a tough time, and while AMD and other chip makers are really taking their lunch, it's going to be, yeah. So again, going back to the options trade, that individual made the trade somewhat far in advance. Again, February, that's not going to be an enormous amount of time away. That's only 119 days. That's actually not too far off. It's still without the 6 to 9 months parameters where people normally trade, I believe. Mostly, it's most people trade as the weeklies, or they trade 30 to 60 days at least. But when you start going out to the plus 100 or plus 150 days, I want to consider those leaps. Those are more like a little bit slightly longer dated options, more of a medium term in my sense. So potentially looking for that again, that support to hold here around 47, which was his previous low for the year, I believe, right? No, $43 was the low for the year. The $47, actually 46.90 was the low for this one here. That being said, anything can happen. This has been somewhat of a disappointment. We saw again, it's going to take a little bit of time to recover. Maybe start building its way up to 50, build a stronger base like we saw that base building here. Maybe get a squeeze involved. We got to see how the volume zone oscillator works here as well, because again, that's going to be going pretty much in the negative territory for the next couple days. If we could have a complete V-shaped recovery if they come out and they say, actually, Intel has developed a new chip that allows people to do three things at once. They're able to cook their coffee on their CPU, they're able to video chat with their mommy, and they actually cures all known diseases to man. Of course, that stock will boom, jump all the way up to God knows what level. But again, that is highly unlikely since Intel is not in the pharmaceutical industry and they're not in the coffee industry. That being said, we're seeing again that really type action to potentially looking for it to kind of build that base in that area. Be a little bit more on the conservative side of just trying to jump in front of the bus here, because again, we saw it previously. It took 2, 3, even 5 days to kind of find a bottom. I'm never going to call a bottom. It's going to be very difficult to do because again, a stock can go up or down for whatever reasons. It can do loopy loops, but you have to kind of pick your poison and maybe potentially start buying in if you really have a longer term time horizon on this. But if we do see that base building around that 50, even down to $47, if this holds that for a couple days or even weeks, in my liking, my recommendation, what I would do, in my opinion, is holding it for a couple weeks, 2 at least, and then we start seeing that build up to 50 and maybe get a squeeze involved and maybe pump it up to 52 to even to the $55 range as well. So that's basically some food for thought on if that will potentially plan out. Again, that plan can go completely in the toilet, and we can just see Intel continue to crash down to that $44 level to $45 there. Again, anything can happen. Just look at how strong AMD has been. It's a complete opposite looking chart. It's just it got whacked again during this week because again we had a lot of chop this week, a little bit of a sell-off towards the beginning of the week. But that 55 EMA, which is that white line there, has been coming in for support multiple times with AMDs. You see it here a lot, and then we're really looking for it to kind of hold that $78 to $79 range. If you're not familiar, I talk about it a lot. My AMD is one of my larger positions in my portfolio. All right, guys, thank you so very much for watching. I definitely always do appreciate it. And if you haven't already, go ahead and hit the like and subscribe button. And as well, if you haven't gone to the Discord, we have a free Discord in the link description down below. And as well as I mentioned, if you're interested on trading on a true platform, not like Robinhood or Weevil, that you can check out the Tastyworks affiliate link down below. That would greatly help and support the channel's growth. Again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace!